Well, in 2013, China ushered the reforms to the ownership model of state-owned enterprises in a bid to embrace private capital for a different mixed ownership. But this was done in a bid to embrace more private capital, to also diversify the businesses of those companies. The move has allowed China's state-owned enterprises giant Sinopec to make forays into other business, while the firm now plans to jointly operate thousands of filling stations and also convenience stores, as Ying Yuan reports.
A lunchbox with meat and vegetable dishes, or grabbing some hot Japanese udons while the car is being refilled. This is a flavor of the new products and services being offered at convenience stores by the joint management team of Sinopec and Taiwan supermarket brand C-Store.
It's convenient and it's good to eat a steamed stuffed bun while filling up.
In the West, 50% to 70% of filling stations' profits come from non-fuel business. But in China, non-fuel business only accounts for 1% of Sinopec's retail sales. It could indicate huge potential for change.
Our cooperation with C-Store just started recently. The opening feedback was very good. The joint store agreement started operating at the end of last year. The variety of goods have increased to 1,600 types from about 600 types, and the daily turnover has increased to over 8,000 yuan from 6,000 yuan. That's about 35% growth.
Sinopec operates 30,000 filling stations and 23,000 convenience stores. Its commercial network could quickly boost the turnover of C-Store. 85 joint stores will open in Hangzhou by March.
Our stores are expanding fast through the cooperation. It could increase our purchasing power and lower our costs.
The change comes amid Sinopec's plan for mixed ownership reform. Sinopec Marketing has sold 29.99% of the shares of its retail unit to investors for over $17 billion. The 25 investors are from both home and abroad. 11 of them are private companies. Experts say the move represents a big step forward for private firms who'd often been shut out from certain sectors.
Sinopec, as a state-controlled enterprise, has considerable monopoly power on oil resources. The mixed ownership model will bring opportunities to private companies to step in the natural resources industry that used to be controlled by state enterprises. This is a big step in reform.
By getting new investors on board, Sinopec plans to diversify its businesses. Apart from the joint supermarket with C-Store, it's forging cooperation networks in many different industries, including with retailers, juice producers, and insurance companies.
For Sinopec, these private and foreign investors will not only bring capital, but also help the company access new business areas to develop non-oil businesses.
Sinopec is planning to become a full-service provider instead of just another oil company. To achieve this goal, the state-owned enterprise is embracing private capital more than ever. The combination of Sinopec and private investors will not just be about money, but also stronger business cooperation. Ying Yuan, CCTV, Hangzhou, Zhejiang Province.